What's going on, snipers? Naeem Al-Obeidi here. This is a little bit of a different style of video that we're posting today because it's an emergency update, and I have the pleasure of being with Joshua Earp today. So this is going to be an extremely important and special update, snipers, as Bitcoin right now is testing the 200-week moving average and the 50-week moving average. You can see we actually have a death cross here, and a lot of you might say, well, this isn't a death cross, this is a weekly chart. Well, a death cross by textbook definition is when a short-term moving averages crosses below a long-term moving average. It doesn't have to be the 50-week or the 50-day or whatever time frame that you're in. If it's a short-term moving average crossing below a long-term moving average, it's considered a death cross. So as a matter of fact, on a weekly time frame, this is actually a stronger confirmation of a death cross. And what do you know? Bitcoin's actually pumping up with new yearly highs today. Currently, our yearly high is at 24,905. Literally, today's daily candle being that candle high. And you can see we've also broke the major snipers resistance level here at 24,300. What does that mean? Well, with a full daily candle confirmation, which currently we are trying to get that right now, we had a pretty bullish daily continuation candle yesterday.
Yeah.
And this, to me, is a hint that our next daily candle has some further room to go to the upside. If we can maintain daily candles, especially full daily candles, bodies and wicks, the full candle above a major level like 24,300, we have officially opened up the door to the next upside target and the next range, which for Bitcoin would actually take it towards the $35,000 level, 34,788 to be exact, because this is the #1 cryptocurrency channel on the internet when it comes to technical analysis, and we give you guys the exact numbers. And so 34,788 being that level is now open if we stay above 24,300. So that's actually the main point of this video. And interestingly enough, on the daily chart, you can see we recently had this golden cross that we discussed where a short-term moving average actually crossed above a long-term moving average. So we have two conflicting confirmations. On the daily chart, we have a bullish confirmation of a golden cross. On the weekly chart, the more macro time frame, we have a bearish confirmation with a death cross. So what does that mean for Bitcoin in the immediate short term? Well, as you snipers know, you may have heard it many times in the past, when we break a major level, right now, the most important support level is 24,300. Hourly and 4-hour candles above or below 24,300 is what will confirm the next move for Bitcoin. So if we see an hourly or 4-hour candle start getting below 24,300, that's the early signs that maybe we're just coming towards the 200-week moving average to give it a nice tap, give it a little bit of a kiss, give it some attention before we see a rejection of the 200-week moving average. So it's fair to say on the bearish case, if we were to create some sort of federal case here for the bears, we are still just testing a major resistance, and that's the 200-week moving average. The same way that we came and initially tested 24,300, got rejected. It's just another major resistance level that we're testing right now. That's the bearish case. The bullish case is that we're above the major resistance, the volume resistance of 24,300. Well, guess what? The bears will come and say, well, that happened here in August of 2022, and we still got rejected, right? So is this just another August of 2022 happening here where we just come above for a short amount of time before we see a rejection? We cannot make a strong bullish case until we are above 25,000 US dollars, because that's what's going to put us above the 50-week and the 200-week moving average. So at this point, for the immediate short-term traders, what I'm watching is 25,000 US dollars as the first major roadblock here for Bitcoin. If we can get above 25,000 US dollars, some candle confirmations above there, that's the early signs that yes, the door now is open for 35,000. Of course, as you snipers know, when you open up a range like this, a very large range, this is a 40% range from 24,300 to 35,000. Typically what will happen is we'll stop at the midpoint of this range. So that would be around the $30,000 level that I would expect Bitcoin to stop around and maybe slow down 29,000 to 30,000 if we stay above hourly and 4-hour candles of this major level here at 24,300. So that's the basics when it comes to market structure, when it comes to the moving averages, and when it comes to volume profiles. That's what I'm looking at right now. Of course, this could all change if we reject this 200-week moving average and we get back below 24,300. Josh, what is your perspective on the current dilemma that we're facing here with a weekly chart showing us a death cross, but then the daily chart, it's showing us a golden cross, a bullish confirmation versus a bearish confirmation?
So as a classic cryptocurrency YouTuber, I would say, I think it could go up or I think it could go down. No, jokes aside, though, everything that Naeem said is value. I think that's the most valuable way you can put it. And anybody that pretends that they know, doesn't really know. And so that's why I think reacting to the markets instead of trying to predict the markets is more powerful. So if you want, I can maybe show you some stuff,
Absolutely.
that I would do, right?
Absolutely.
And it's really kind of echoes what Naeem says, but also, so, yes, you could start dollar cost averaging into a short, but that would be predicting what the market is going to do rather than observing, right? So what I like to do is the daily is definitely really important. All time frames are, I believe. Now, one thing too is there's this indicator that you can check out, which, by the way, indicators are only good whenever, let's see, Wolfpack. Do we still have that or no? Need to download it maybe?
We can add it in.
But anyway, so indicators are only good after you've already taken into account what Naeem has said. Yeah, that's the one. So basically, that's what I would say about that. Okay. Now, because really the indicators don't matter, and that's what Naeem has taught me, is that, don't trade based off of indicators. Trade based off of market structure, volume, and overall trend, right? And so speaking of overall trend, let's just take a look real quick here at the monthly. Let's go check this out. So, do you have this on Heiken Ashi or this is just regular?
No, I think that the
TradingView just does that.
Wolfpack
Oh yeah, that's right.
shifted the.
Yeah, so it automatically changes it to Heiken Ashi, which is where it's another same Japanese ancestral. So wow, that is interesting. When you go
It's
out,
still red.
So when you go, it's still red. So that's another thing. Until this Heiken Ashi turns, because what a Heiken Ashi by definition is, whenever the hourly candle that we're currently looking at is about the average half value of basically this candle. And even if this is a green candle, it'll still show as red due to the average that it takes here. But on the weekly though, it's pretty green. And so what I've learned is that you have to have smaller time frames back you up on the bigger time frames, and you might be able to see something on the smaller time frames first come through before it makes its way to the higher time frames.
And interestingly enough, it's only green here through 2023 start, which a lot of people would say fundamentally, right? Because technicals are 10%, fundamentals are 10%, 80% of trading is psychological. But when we're looking at the fundamentals, we could say that all we saw here was tax loss harvesting, right? People selling their positions into the end of the year and then re-entering their positions into the start of 2023. And of course, that's going to cause a short-term uptrend. And so right now in the weekly chart, it looks like there's green, but it's from the start of the year. Could we make the hypothesis and justify the hypothesis that we're only seeing a short-term trend to the upside because people are re-entering their positions from tax loss harvesting, but that doesn't mean the overall bear market is over and that we're going to continue to see downside, because the monthly still shows that we're in a downtrend, and even the weekly chart is showing a death cross, right? So I would say, to answer my own question from earlier that I asked Josh, the weekly chart is stronger than the daily chart. And so that, yes, there's a golden cross on the daily chart, but the weekly chart is what's going to give us the overall trend over the next few quarters into the next few weeks versus just trying to predict the next few days.
Yeah, so another thing, yeah, that's better there. So another thing that I like to do is kind of, back test different indicators too. So if we come here, we'll do a vertical line, okay? So if you look at this Wolfpack ID, right, which is an old Forex trading indicator, I believe, you'll be able to see that basically, right, whenever this, there was a lot of divergence, but really it's mostly on the other time frames. So if you check this out, the daily obviously is that, and that is pretty interesting on the daily. So if you would have got in due to this vertical line, right? If you would have got in at the daily, if you would have just been paying attention to this indicator, literally nothing else alone. And that's why bots are also interesting. Right when this money flow started coming up, as you can see right here, and crossing the 0 line on the indicator, which would literally be right here, this point in time, this vertical line, that would have been a great time. And I always like to draw my lines in the colors that I aim. So if I'm going to be making money, then these are things that I look for.
I'm sorry to interrupt.
Yeah,
The
go
comments are going to say that you keep interrupting, but I see something very important to talk about here, and that's you talked about market structure, Josh. I see a classic cup and handle here.
Cup and handle. Wow, that's huge. I didn't even think of that. And I have reasons why I think we're entering the next bull market as well.
So you take the base of the cup, and then you calculate the target. Guess what? Puts you right at what we were talking about here.
Exactly.
This local high here, right around 30,000. Very interesting, huh? Sorry to
It
interrupt,
is.
but
No, it's not interruption. It's intervention because you're adding.
you
value.
helped me as a trader, and so I'm seeing this now that we're talking about
and
the
vice
market
versa,
structure.
man. We build on each other.
I love it, man.
This is the man right here. This is my mentor. This guy taught me everything I know.
Thank you, man.
So basically, here's the thing. Is I mean, if you just back test it too, right? Because a lot of it's all about back testing. So once again, when's the last time the red on the daily, started crossing the zero line right here? What if we would have went long right here, right? So then you just start examining things and looking at things, when did it cross last time? Bam. So if you would have got in right here, then you could have rode it all the way up here, and vice versa, right? So it's like, and same thing whenever it crosses the zero line, right? So for instance, if you look right here, this is when it crossed from the green to the red through the zero line. So if you would have taken a short right there, you can see right here, if you would have shorted this one, we can
Those
make
are
that red.
Handsome profits.
These are some things that you just can't ignore, So what I would tell people out there is start paying attention to zero lines, not just the zero lines, but vertical lines. I don't see a lot of people draw many verticals. Look, here's whenever it crossed again. That would just be a little pump, but it's still pumped. So these are all things that are very interesting to me, and they're definitely worth noting, and I can just go down and dissect the whole chart, but that's literally just using this indicator alone. But I don't like to use it just alone, okay? I like to use it as confirmation. And so the whole thing is, so you have to ask ourselves right now, where are we at? So if this is true, if this indicator, and every time, and we backtest this and this is proven to be true, so you got to ask yourself, what does that mean? So let's go ahead and go back to the daily for a second. So you have to ask yourself, if we can backtest this specific indicator, and it's always correct, like 90% of the time, then where are we at right here? Well, we obviously already crossed the zero line, and we're moving into what's called overbought territory. And that's the other thing that Naeem will tell you, is that, and I agree with him on, is you really have to think, what is the overall trend? The overall trend, okay? Especially if you look at it on a logarithmic chart, right? I mean, if you look at this shit on logarithmic and you zoom all the way out, you will see from Bitcoin's inception to where it is now, the price is going up. So let's just let that be known, okay? I know this was pretty bad and people got pretty wrecked, and I feel sorry for you, but the shit's going up, okay? Overall. Now, you could also say that's arguably because the price of the dollar is going down. Well, I agree, and we'll talk about the DXY here in a second. But right now, you have to ask yourself, if this indicator is correct, where are we right now on the daily? Well, until we start seeing this money flow, start hooking and curving around just as it did right here, and started hooking and curving around and have maybe some a bearish double top action here, which by the way was divergence. So once again, this is the #1 cryptocurrency channel on the entire internet. This is the man that taught me everything I know, and you're not going to learn better stuff anywhere else. We promise you that. We don't like to waste time. We wouldn't want to waste yours. So we saw this coming big time. I mean, this is bearish divergence, like a mug.
Huge.
Look at this, huge bearish divergence.
And then you waited for if you waited for the indicator, confirmation.
And so once
done.
you see, so what you want to do is you want to wait till this money flow starts curving over, and then you want to ride that into the zero line. But these zero lines also serve as pretty big, supports and resistance, meaning sometimes it won't make it into the red. Sometimes it'll just come and bounce, and it'll just come.
To add to your thesis, Josh, what we could be waiting for as well, something to monitor, since we're going over this with you guys already, is if you do end up adopting this strategy of using this indicator, called the Wolfpack, I would say that right now something to monitor is the bearish divergence that could potentially be forming right now, because we haven't formed a high here where price action has formed a high. So far this is bearish
It
divergence.
could still be, yeah.
What I want to see is, are we
but-
going to go above this
But here's
high
the thing.
on the Wolfpack?
Here's the thing is we also have arguably a little bit of bullish divergence, you know, I would say too. But no, you're absolutely right. It's just overextended. And that's where I wanted to get into the longer term, because when we go here in the weekly, right? Let's go ahead and just get rid of these lines real quick, just to do it. I think I'm zoomed out too much for me. I could also just do unzoom. Okay, never mind. We were in the wrong damn thing. It's a little late over here, guys.
No, this is a phenomenal video. Really good content.
But
A lot of
here's the
quote.
thing. I mean, we're just telling you guys what we're seeing. Now, the thing is, once again, we're still on log, but here's the thing. And I love how you have this drawn right here, because this literally, as soon as this broke out, you knew for a fact. I had the same thing drawn, except I didn't have the bottom drawn. I just had the, resistance there, which is actually, bigger. Yeah, it's bigger because it goes all the way down here. So look, here's the thing. Let's get off log for a second. Okay, so let's just trade like a normie for a second. So when we're coming down here, I think that we are in for the next bull market. Now, let me explain why. Because, we have this massive, massive line of resistance that is a long-term line of resistance that just got broken, okay? So that right there tells you, hey, there's something going on, right? So that's a massive, massive line of resistance. And I have this drawn on my chart. So the fact that we, broke that is huge. Now, at the same time, it's interesting because there's also one very important line that I like to pay attention to. This is on the Binance chart. So I'm not used to drawing it on the Binance chart, but it's more or less the same. Is this right here. This is what I call this is my yellow line actually, because, and I like to call it my yellow line, and I like to make it golden, because if you follow the yellow brick road, and you follow, which is the gold, by the way, that's why they call it the Wizard of Oz. OZ, Oz is measured in gold, OZ, ounces, gold is measured in ounces, And if you follow the money, or if you follow the yellow brick road, then if you just follow the yellow brick road, sorry, this is a little dirty chart, but if you follow the yellow brick road, then you will get there a lot faster. So check this out, guys. We have never dropped below this yellow line until about the COVID crash. It's the only time, and we spent several weeks and got there. And now, the interesting thing is we did the same thing here. And historically, anytime that Bitcoin comes down and crosses this yellow line, which we can see that it has done a retest right here. So not only did it cross the yellow line, and the last time was COVID. So Naeem asked me the question one day, and he said, Josh, if you could go back to March 2020 and make one decision, what would be the best decision you could have made financially? And obviously it would have been to take everything I own and put it into Bitcoin, and take out as many credit cards and loans and throw it all into Bitcoin. That could have been the best thing that I could have done, back in those days. Well, thanks to Mr. Brandon in office nowadays, we got another one of those COVID crashes, but the price just got too high, so now it didn't crash as low. You see how that works? So not only did we cross above the zero line here as well, by the way, on the weekly, by the way. So once again, going back to this indicator, which we only use for confirmation, if you would have got in right there, you'd be looking pretty nice right now, right? Doing nothing else except following this damn indicator, all right? That's the crazy part about it. Like sometimes people just overcomplicate it, right? But I don't believe in following indicators, even if they're proven to be effective. I just use them as confirmation. But anyway, so what I'm saying is we've crossed above this yellow line and we've retested it officially with 2 weekly candles. And so the fact that, and it makes sense why this weekly candle is actually bigger than this one, because that double bottom right there on the weekly, on one of the most significant, if I would argue actually the oldest term, there is no trend line that you can draw that is older than this trend line. So that's another thing Naeem taught me is, Josh, don't draw imaginary lines. And the longer term and the more touches on a higher time frame that a line has, the more valid it is. So if you actually go back and count how many times this, I hate to curse, but I'm just so passionate about it, this damn thing is touched. I mean, it is ridiculous. If I just clean it up a little bit here, it's still a little off, but you get the idea. I'm actually on Naeem's computer. I'm not even on my own computer. But what I'm trying to tell you is this thing has been touched a lot of times. Okay, and every time that it's ever been that low, I'm telling you, this is the time to buy Bitcoin. Even if it comes back and retouches this yellow line or goes a little bit under again, this is an increasing line. So the more time goes on, because that's what a chart is reflecting price over time. So the more time that goes on, we are in the early days of March 2020. So that's the bullish case, okay? Now, it doesn't mean we can't come back down and spend some more time under it, but just realize that would be the first time in history that it would do that. And the fact that it bounced twice right off of here exactly, like you can't make this shit up, plus it's now higher than it is over here, plus it matches up with the indicator, plus on top of that, I mean, you just, when in doubt, zoom out. So I would say, if anything, I'm bullish until I have a reason not to be bullish. But since I'm not in a position at this exact time, am I going to FOMO order buy into this? Well, probably not. But if it starts to do what Naeem was saying in the middle of the video, and we start to see, some higher, like 4 hourly, 6 hourly, or daily candle closes, whatever it is, above this, and we start obviously heading in that direction, sure, I might FOMO in and then put a, stop loss maybe. A great place for a stop loss would be under these moving averages, right?
Exactly.
So
I would say a confirmation, and we'll look at the DXY. I'm just gonna bring this to homeostasis. So amazing stuff, Josh. The bullish and bearish case is what we're talking about. At the end of the day, we are still facing a major resistance at the 200-week moving average, and that's very clear. Like, we cannot take that off the table that, we're not facing a very important resistance level. You guys can take advantage of this Wolfpack indicator. Apparently, it's a money flow indicator, right? So it tells you about money flow, and when that money flow starts to come to the buyers or the sellers. So we'll definitely continue to keep some eyesight on that indicator. And so once again, if you have yet to enter positions, 25,000 is the next confirmation that you're looking for. 25,000 gets us above both major moving averages, and then we can start talking about the trail and the path to the next major price target here of 35,000. And then, by the way, if you don't mind pulling up your spider lines on your chart, I'll quickly wrap up the video with showing your chart, Josh, of spider lines have been extremely accurate. And as you pull that up on your phone, I'll go ahead and talk about the DXY since we promised to talk about that. DXY, interestingly enough, got back above its 50-day moving average after rejecting over the last 7 months, showing downside on the weekly chart. We still have to get above this 50-week moving average. But remember, guys, with the DXY, we were extremely bullish at the start of 2022, and then towards the latter part of 2022, we saw some bearish price action. And over the last 7 months, we've seen bearish price action here for the DXY. So at this point, what we're monitoring is a reversal here for the DXY to potentially see some upside. And so what I do want to talk about here with the DXY is the fact that it is starting to potentially see a reversal. What we're starting to see is some weekly candles to the green, right? And we haven't seen that in a while. The DXY has been quite bearish. And so this is something to monitor, because if we start to break these major levels, right, like the 50-week moving average, or 106 is the exact number here, now we're potentially in for a higher high or lower high for the DXY. That could be detrimental to equity markets and to Bitcoin. I will note this for the bearish case as well, right? The S&P 500 is something to monitor against Bitcoin. It's still stuck at resistance. It's inside of this ascending triangle, but we've yet to break the major resistance. This is something that we have to monitor. And so that's what I'm monitoring for the S&P 500. It does seem like today, a lot of people will say, like, Naeem, based on the revolving parts, a lot of people watch our channel based on the 4-dimensional revolving parts. They will say to us, well, Naeem, how does the environment look now that Bitcoin is making a move above a major resistance? Well, today specifically, I'll tell you this, from my perspective, Bitcoin had no reason to actually make this move other than the fact that it wanted to touch the 200-week moving average because it was so close to it already. The S&P 500 didn't make any major moves over the last 24 to 48 hours. The DXY actually has been showing the opposite. It's been actually bearish towards Bitcoin because it's been reversing. And so there actually isn't much justification for Bitcoin to continue further up right now. So I think it's important to keep that in mind, snipers, for the bear case that we're still facing major resistance. The 200-week moving average is still there. And why wouldn't Bitcoin test the 200-week moving average if it's so close to it? Like literally 2% away. 24,300 was a major level, but sometimes what the market makers will do is as they start to see that moving average get close to it, they'll start to bring the price towards that resistance, and they know they can get above that resistance and fake traders out because all it's doing is magnetizing itself towards that 200-week moving average. Knowing Bitcoin, what's going to happen is we're going to wick above the 200-week, maybe hit 25, 26, 27,000, clear out short positions. We'll see $700 million of short positions get liquidated like we saw with the initial reversal from the start of the year. And then we'll see Bitcoin drop and then come back below 24,000, right? Just knowing Bitcoin, it loves to clear out those leverage positions. So interesting bear and bull case. Obviously, there's a bull case. We always talk about the bullish case here, but I want to give you guys both sides of the equation and speak to the bears and the bulls of this channel. And to wrap up this video, Josh, I would love for you to show your spider lines.
Yeah.
Because here's actually a bullish puzzle piece right now. We broke above the spider line.
Yep. So this right here is the spider line. We broke above it, as you can see, and we're still like basically, I don't know if you guys can see that, but yeah, so we haven't even went below it yet. So as long as we stay above that spider line, then we're going to, basically be good on the bullish case. So very important stuff.
I appreciate your time, Josh. It's
Thank
always
you,
a
brother.
pleasure to have you on this channel. For real. And he brings so much value. This was probably one of the best videos we've actually recorded this year. We went through so much, macro and micro. So a lot to talk about. To summarize, as always, snipers, what are we watching right now? We're watching Bitcoin still facing a major resistance. This is actually the last resistance that we're facing. I might sound like a broken record here, but I wasn't lying when I said 24,300 was a major resistance. Guess what? We rejected. I'm not lying when I say right now, this is the last major resistance. Above 25,000 hourly and 4-hour candles, we open up the door to 35,000 US dollars. Does Bitcoin have justification to see a polar express route to the next major resistance? Not based on the revolving parts just yet. S&P 500 still facing major resistance. Nothing new happened today. You can actually see Bitcoin against the SPY. Very interesting here. Now, what I will mention, snipers, is with this move, Bitcoin dominance, something we've been monitoring, has been moving up. Altcoins are not actually doing well with this move to the upside. That's not a bullish puzzle piece. We want to see altcoins doing well and Bitcoin's doing well. But look, you pull up altcoins, Cardano right now against the US dollar is down 2%. So altcoins are flowing into Bitcoin right now. Is that the only reason Bitcoin is finally making its last inch towards a major resistance? It's because it's not seeing new liquidity come to the market. Maybe that indicator that we saw just now, the wolf pack showing money flow into Bitcoin, that money flow isn't new capital coming to the market. Maybe it's just altcoins continuing their transition into Bitcoin in a bear market in anticipation for more downside. Why is that important? For those that have been tuned in the channel over the last 5 years, you understand what I'm saying here. Bitcoin dominance needs to get to its 200-week moving average for us to actually be confident in the fact that we have reached the bottom and we are nowhere near it. So I want to see Bitcoin dominance move up higher as fast as possible. The faster we can get towards this, the more confident I am in saying that we have reached the bottom. The lower we are, the more chance there is for altcoins to fool us, move into Bitcoin, and for the overall market to see more liquidity get sucked out of it over time. And that macro could play part, so that Bitcoin dominance is something to monitor. We did see it move to the upside here recently, and so that's a little bit more complex. Other than that, I will say that I think we covered a lot on this video. MicroStrategy up 10% today. What a phenomenal move here for the public company that holds the most amount of Bitcoin. And with that being said, snipers, I hope you enjoyed this video. Do you have anything else, Josh?
That's about it from me. So thank you. We really appreciate it.
We appreciate each and every one of you snipers tuned in the channel. Smash the like button for the YouTube algorithm if you support this content. And once again, a big thank you to Mr. Joshua Erb for being on the channel. His YouTube channel link will be in the description below. And until next time, snipers, as always, snipers.